when you're hanging out at the club or wherever you hang out, and you're like, dude, I got 17% on my money this month. Would you see that big rip with Tesla or who, whatever, as opposed to like, oh, I got boring money. I did nothing and I made $40,000 this year, you know? So some people just
Yep.
don't like talking about that stuff.
What's up, y'all? Welcome to I'm Rich.
Now what?
What's going on, Mark?
Not, man, just over here stressing out about the market and figuring out what we're going to do with our portfolio today. What's going on over there?
No, same. And I think a good relevant topic for this is let's just do a quick 15-minute one on and talk about what are we currently investing in, where are we seeing the marketplace. I know we're a little bit heavier into, like, I know you're heavier into private companies. I'm heavier into real estate. We both have a little bit of money in the market, a little bit in crypto. I know we both have some alternative assets, jewelry and watches and cars and guns and stuff like that. We both have a lot of notes, right? Like dividend producing, performing notes out there as well.
Well, they're supposed to be. They're supposed to be. They're supposed to be performing.
Most of mine are performing. There's a few who are on
Yeah,
hold with. So,
I'm just
um,
messing.
but let's just go through right each of these. I remember at one of your events, David Karp was up there, and he manages $40 billion plus for ultra high net worth individuals. Only has like 160 clients, so it's like what is that, a quarter billion a piece that he has with each of these clients. And he's got a very simple investment strategy, and his investment strategy is uh, a quarter, a quarter, a quarter, a quarter into private equity, a quarter into public equities like stocks, a quarter into real estate, and a quarter into dividend performing um, notes, right? I think that's a great simple way to allocate funds, but I'm not that diversified, right? I'm much heavier in real estate, much heavier into private equity. Um, I don't have a lot in stocks, but I want to talk through just your thoughts, dude, on
Yeah.
each one of these. So let's start out with the stock market, right? The stock market, just it's been going bananas over the past, like, when this show episode airs, I think it'll be in early July. We're doing this in mid-June, by the way. So if the market shifts in a massive way over the next 3 weeks, guys, don't yell at us about it. But at the same
What's coming?
time, yeah, it's coming, right? And Elon Musk just hit $1 trillion net worth, right? They just had the SpaceX IPO, and currently stocks on a price earnings ratio are trading at 45 times EBITDA, right? Which is double what it's historically traded at for the previous 100 years of the stock market, right? Previous 100 years, the average is 22x. On that, and it's currently trading at 45x. And a lot of it is propped up on just a handful of companies, mostly like the big tech companies, Nvidia's, the Googles, um, and some of the big boys. What are your thoughts on the stock market? But here's the thing: the stock market was down at the beginning of the well, it was up for a little bit at the beginning of the year, and then it was down when all the oil stuff happened in Iran, and then Trump essentially just said, "Hey, there's ceasefire. The Strait of Hormuz is back open, and get ready for oil to trade positively again." So that news just came out about a week ago, and the stock market has surged like 10% in the past 30 days because of it. So, um, what are your thoughts on it?
I don't have a lot of thoughts on it because I don't really know what's going on. I genuinely don't know what's going on with the stock market in any way, shape, or form. At a high level, I mean, obviously, it's on a run. It's been on a run for a very long time. That's not normal. There's definitely a correction coming, but a matter of when. I think there's a couple of things we got to ask ourselves about this whole conversation in general. What's our needs today? And I'm talking independently, individually, right? And then what kind of amount, what is my bag? What am I working with, right? Because I think it's different advice if you have $1 million versus if you have $100 million. You know what I mean? I think it also depends on what's your risk tolerance, what's your effort tolerance, what are you working on now, what's your time look like, what's your energy look like, what makes you tick, right? Because a lot of people, if you're heavy in crypto, it's taken a pretty big hit, right, in the last 12 months. So how does that make you feel? Does it make you excited? Does it get you down? How are you handling this emotional financial, situation in your brain. A lot of people have the phase like, oh, everything's great, I'm buying more. Bullshit. You're scared to death. Your dollar cost averaging down, so your losses are less. It looks like on paper, but you're losing more. Like, how are you moving? What are you trying to really do? But I think the market definitely has to correct sooner than later. But that doesn't mean it's going to be a big correction overnight. But diversification is your friend, right? If depending how you're diversified in the game.
Hmm. Yeah, I think I mean, one of the other things that Carp said when he was speaking was that all the families he uh, manages wealth for, they all made their money in a single vertical, right? So when they were growing the business, depending on the season that you're in right now, if you're growing wealth and building wealth right now, maybe you're all in a fewer um, asset classes, right?
Mhm.
And so that's not wrong. There's no right or wrong here. I think we're just talking high level concepts. What I can say is there's probably some concepts that when you take a step back and you look at market cycles overall, um, dude, what do the masses do? The masses buy high and they sell low, right? And that's how you lose money. And so a big part of this is just moving in the opposite direction of the masses. If the masses are excited about something and it's creating a bubble, that's probably time to get out of that bubble. And you take a look at the stock market, like people like my dad, they're he looks at the stock market. He's like, it keeps on going, and I'm afraid to take money out of it because it keep on going. Well, Dad, you're going to be really unhappy when it starts coming down, and like take your chips off the table has always been my mindset of it. You got some ran some great waves here, and but the reality is we're in a midterm election year, right? Historically, the stock market has not performed very well between July and October of midterm election years. And uh, we all know it's overheated. We all know it's overvalued. We all know it's propped up on only a handful of stocks, and yet people aren't taking their money off the table and then just moving it into like more fixed type stuff. So it's interesting to see how people are reacting to it, and hey, I guess we'll see. My issue with the stock market is not based on performance of these companies. It's based on speculation, right? It's based on geopolitical shit that's going on. It's based on what somebody tweets on social media. It's not based on the actual performance, or it's very limitedly based on the actual performance of these companies.
Yeah, that's why it's hard for real people that build real businesses to understand, right? Because it's like it doesn't make
Hmm.
sense. How
Yep.
I can build a company and sell for 5x of EBITDA, but these companies are trading for 45 on the market. I think there's another thing too. I
Yep.
mean, truth is, I wish I would have put my money in the market 3 years ago instead of lent it out and was active and had to deal with lawyers and had to deal with partners and investors and all this other shit. I would have a lot more money, truthfully, right? I'd had a
Yeah.
lot
Well,
easier
dude,
life. I'd have
hindsight's
had a lot
2020
more
though.
money. Yeah, hindsight. But what I'm
Hmm.
saying is like sometimes more activity is not better activity. Sometimes awareness is, you just got to know what you know. I don't know the market, so I'm just talking like if we're talking about broad strokes, like looking back, I'd probably 3x my money in the market doing nothing. Just with the way the runs happened. Versus I had to
Yep.
do active income with active investing with this. By the way, that real the way the markets I'd have been in would have been passive. You just park your money and just go do your thing. Um, so it's like, it depends on what you're into. Are you looking for activity? Are you looking for excitement? Are you looking? And by the way, your dad's older than you and I, clearly. So if he takes a 50% hit in his portfolio, that's way more detrimental to him today than it would be you and I, for sure. So
Hmm.
I don't think people have the emotional side of both sides of the game. I have $1 million. If the market goes on a tear and I have 200,000 by the end of the year, 1.2 million, dude, I crushed it. Versus if the market's at a million, if I have 1 million today and it goes down to 750 or 650 or whatever, say 750, I'm screwed, right? As opposed to taking that million, I could go liquid and get 3.5% high interest yield account and make $36,000 a year doing nothing, or get a T bond, or what. There's a lot of other ways to generate income for protection against your principal. So I think a lot of
Yep.
people are, they're just they. But again, when you're hanging out at the club or wherever you hang out, and you're like, dude, I got 17% on my money this month. Would you see that big rip with Tesla or who, whatever? as opposed to like, oh, I got boring money, I did nothing, and I made $40,000 this year. You know, so some people just
Yep.
don't like talking about that stuff.
Well, let's pivot into that. Let's pivot into what about notes, dividend investments? If somebody does want to take their money out of the stock market or out of the crypto, maybe people are out there buying crypto. First off, let's hit on crypto because it's kind of like a public equity. Are
Yeah.
you throwing any money in crypto?
No, not right now. I'm pretty heavy
Yeah,
in
you're.
there. I got smacked. Obviously it's down 50% probably at least from the highs. But again, that's a bucket where I expect it. I don't like it, but I expect it to happen. And I have a 40-year vision with it. I don't have a 4-minute vision. Now,
Yep.
do I wish I would have sold at 126 and bought it back today for what? I don't even know what it's at. I don't really look at it, but like I know it's down. But like, yeah, I wish I would have done that. But like, who in the world? I'm not timing markets over here. You know what I mean? So I would kind of
Hmm.
settle on that and just let its system do what it does. I do believe Bitcoin is $1 million in the next 20 years, a coin. And if it hits that number, I'll be a genius. You know what I mean?
Yep. No, I agree. I think so. Here's the thing. I think when things are too liquid for me, I watch it too much, right? Like the
Mm.
set it and forget it stuff. I'm just way better, and I don't have the emotional highs and lows. So I had a bunch of money in crypto. I don't know, probably about a million. Maybe just shy of $1 million. A lot of it lost money. Some of it broke even. Some of it made a couple bucks. I'm probably net loss, but overall, I got out of crypto not because of the ups and downs of crypto, of just like I found myself paying too much attention to it. And it became a distraction from
Yeah.
running my businesses. And
Yep.
so I just didn't want the mental thinking about it and
Well,
waking up and checking my Coinbase account and looking at where things are and buying things in the middle of the night, and then it messes me up. And so I got rid of it more just so I could focus on other things. Not that I'm anti crypto. I think um if I didn't have so much good stuff going on with the software, I would probably be playing around in crypto. But either way, all right, stocks check, crypto check. Let's move into notes and dividends. We had both mentioned we've done a lot in notes. I have multiple seven figures of notes out there right now. Um, I would say majority of them are performing. Vast majority of mine are performing, and most of them, I'm in an active space in the real estate space, so they're at somewhere between 8 to like a 15% return. I'd say mostly averaging the 10 to 12% range. And dude, for me, I think I'm not like super greedy. I know that I could actively make probably more in the 18% range. But dude, to be passive and make 10 to 12% on multiple seven figures, I think is a great position to be in. So I feel good about that. They are performing right now. They are on a lot of real estate assets, and um, some of those are performing great. Some of them are struggling a little bit because
mhm.
expenses have gone up, and maybe we've paused some of the returns on those. But overall, like I feel good about that, and I feel like that mailbox money, man, just gives me a sense of calmness and knowing that it's coming in. But how are yours performing, and how do you feel about them?
Listen, I think everyone needs to understand what kind of investor they are and understand what knowledge they have or don't have. I think some people have a lot of heartache with some of those passive investments or mailbox money investments if they don't understand how to underwrite it, right? So they have a lot of heartburn. You and I have enough experience to know how to, our risk tolerance is there for it. We understand the asset class. Obviously, I've been on for 30 years. You've been on a long time as well. So like we do have a different feel for it, how to protect yourself, how to downside, the upside, etc. I think anytime you get into the higher numbers, as you know, it typically carries a bigger risk profile, and you better understand that. Don't be greedy, be smart, enjoy it. Like I look at my investments as partnerships, not necessarily just a loan, because I want them to win and I want to get paid back. I want them to make money, and because if they don't make money, I don't get paid back. So it's kind of like a strategic play. And ideally, one thing I've done, Tim, is I actually work with less people, but do more with less. When I spread
Hmm.
myself out too thin, that's when I was managing too many pieces, and you're dealing with different types of investors or wannabe investors. And that was very taxing for me because that's not how I like to roll. But yeah, man, dude, listen, anytime you can go to bed and or do anything and the money's coming in, it's I hope everyone gets to experience that at scale. it's a good feeling. you know.
I
So
think the other thing to note is what I've recognized from your like my investments have always been more longer term or like not necessarily like a deadline. Like I'll give a loan, and as long as it's making monthly payments, like I'm cool with it. Um, and put 12 months or 24 months on there on the term, and I'm usually okay extending it or whatever that looks like. I've noticed a lot of yours are short term, right? Like you like helping give somebody like a prop up, but then seeing that money cycle back. And I think there's something to be said about that of knowing that the money's coming back. I think it definitely builds a level of confidence in investing with that individual.
yeah, listen, I like short term stuff just because I forget what I got going on. I mean, truth is, yesterday I got an email from a lawyer saying, "Hey, they're closing on a deal." Dude, I sold this owner financing 12 months ago. I forgot I even owned it, right? Because I haven't seen it on the sheet. So, obviously there trickles
Hmm.
into an account, like whatever happens with that, the monthly continuity of it. But yeah, I like short term stuff, man. I like 30 days or less, truthfully. Not say I haven't done
Yep.
longer, but I do have long. But the thing is, I'm diverse. I do have very long term stuff that's been out there for many years, and I have stuff that are 12 months, and I have stuff that are 6 months. I think you got to be conscious of the market cycle, the asset class, and what your cash positions are, and what you need and wanted to do, right? Like if I loan you out long term money at 10% today, but the market's bearing 20% short term, like I'm stealing from myself because I know better. You know what I mean? So I think you kind of figure out a mix
Yep.
and how do you get in the 15% range per year with a little bit of blend on all of that. It's not bad, you know.
Yep. I
Yeah.
like it. Yeah. I think if you have smaller amounts of money, I think you can definitely achieve that, 15, 25.
Oh, without a
I
doubt.
think it's hard to deploy more than 10 million bucks, man, at those kinds of rates, unless
It's
you're
not happening.
actively managing it and
That's a
transacting
business.
on it.
That's a business. Yeah, that's a
Yeah.
business, right? You're going to have a front end team acquiring those kind of opportunities. I'm involved in a fund. They just did a deal. Actually, dude, I got to send this to you. This just happened yesterday. Actually, in your market in Charleston, South Carolina, they did a bridge loan. I think we did 500,000 or 750 maybe. And dude, they got an 82%. I think it's 80 something percent, 82% in a 6 month bridge loan. Wild. And that's how much that's like the return of it. So it's pretty interesting how they wrote that up. Um, and this is a huge project. This is not a small project. It's pretty interesting.
Hmm.
So there's lots of ways but like you said, at scale, at big dollar amounts, 100% are not doing tens of millions of dollars unless you have a full blown team specifically, and that's a specialized product at that point. You could deploy out $10 million fairly easy at standard 8, 10%, 12% all day long.
Yep. Agreed.
Yeah.
How about private equity, businesses and stuff that you're seeing? Are you seeing struggles, positive? Are you betting on the horse? Are you betting on the jockey? Like, what's the industry? What are you deploying money into from the private equity standpoint?
Yeah, a little bit. I probably have about 15% of my portfolio in that kind of stuff. I have one that's at, I have a handful. I have about three of them that are absolutely crushing it. One is definitely murdering it. And then I have some that are just dogs, right? I have one that's taking a big L because the main guy, he's just a bad character inside the system. So they had to get him out. They brought in another guy. So I mean, there's a lot of nuances with that. If you think you're going to get your money back in 3 years, plan on 10. You know what I mean? But again, I really love, for me, why I do it. I love supporting the guys doing the business, being a part of it, watching them grow, and getting my money back and making a return, obviously. But like, dude, everyone talks about. I think there's a big problem in the industry overall, where everyone's like, buy businesses, it's easy, it's easy. This is not an easy game. It is a lot of hard work. Yes, you can raise the capital and private money. Yes, you can get an SBA loan for $5 million, 10 million now. But like, it is a lot of work, and if you don't know how to make decisions and lead and manage and grow and like there's a lot of problems in the making, man, with that side of the world right now. I really do think there's issues in the making. I know there is actually. I see it happen
I,
already.
I
Yeah.
I think it's a bubble, or I think
Yeah.
it's going to turn into a bubble potentially. I actually don't invest in many other people's businesses. I have some money in a prop tech fund that has money in maybe like 12 different prop tech startups. And yeah, to your point, about a quarter of those are doing really, really good. Maybe a third are doing really, really good. A
Yeah.
third are meh, fine, and a third have either failed or about to fail. Um,
Hmm.
and that's it. The only other money that I put into private equity is just in my own privately held companies, like my software and stuff. And so, um, yeah, that's again, it's understanding who you are, what you want to invest in. I know that if I put money into my own business, I can hire more people and I can get much better return. And I
Yep.
diversify, elsewhere. All right, last one, man. Alternative assets: gold, jewelry, precious metals, guns, art, cars. Like, what about that side?
Well, I like them all. I like them all for personal use and business use and collection value. The thing is, though, like if you buy a purse and it's a Michael Kors, you get it for $200. It's worth zero as soon as you buy it. If you buy a Hermes for $30,000 and you buy the right ones, well, they're going to be worth more money, right? And they're both purses, and one's crazy expensive and or not, because we don't look at it as a cost, we look at it as an investment. Same thing with cars. Some of my cars are going up drastically in value. I try to buy ones that will go up. Not all do, unfortunately, but my thought process is that, right? I mean, I have cars that you pay many six figures for, and the thing's worth way more than you paid for it, and you've owned it for 5, 6, 7 years, you know? So that's pretty cool when that happens. And depending what cars you have, that's the car market's on fire, dude, depending which cars you're in. You know, watches
Yeah.
as well. They took a big hit. Mm-hmm. Good.
What I like about those is they're fairly liquid. Although they're big dollar amounts, they're still
Oh, yeah.
relatively liquid. If you got from a car standpoint, like dude, if you need to sell a car in one of your vehicles and put $200,000 or $300,000 in your bank account next week, you could move a car very, very quickly. There's a
Oh,
lot of money moving around in that space. Whereas real estate's a little bit slower, man. Especially commercial real estate takes a long time to transact on a deal, and guns you can move immediately, precious metals you can move immediately, jewelry you can move immediately, watches and vehicles. I do think that's a cool place, and I think it's a good storer of value. And many times they go up in value. So
if
I
you
don't
buy
put
the
a
right
ton
ones.
into that, but
Mhm.
yeah, if you buy the right ones,
Yeah, but listen, I mean, the truth is
good
with gold
stuff,
and
man.
silver, with what happened, if you have nice gold watches, nice silver, like jewelry because you like it, I'm not, some of that stuff I didn't invest in. I didn't buy it for an investment. I bought it because it's like, I have custom jewelry and it has meaning to it. And I thought about it and I created it with the designer and it just so happens it tripled in value because the metal that it's made with tripled in value. You know what I mean? But it's more important. I have zero desire to
Hmm.
sell it ever. I'm not looking to sell it. I didn't do it for that. Yes, it went up. Yes, it did all this cool stuff. But like again, I've never looked at jewelry as particular for me to go up in value. So it's really all my jewelry is custom. I don't have any jewelry that's just off the shelf. I've always made it because I wanted it intentional, even for myself, my son, my wife, my daughter. Like I'm always thinking about like I could create this cross and I could put these four dots and it means this is my birthstone, my son's birth, like, and then it's Evans and then the logo, like the crest. And so I'm always thinking about more custom-ish jewelry versus like off the shelf stuff. But not say I mean, I got off the shelf watches that do very well. So, but yeah, dude, I listen, people make a lot of money in a business in those models. You know what I mean?
Hmm.
Cars, jewelry, metals, it's available.
Well, yeah, I mean, again, they're stores of value.
Mhm.
They could be great investments of increasing in value, but there's also utility to them, right? Like you can wear the jewelry. If shit hits the fan, you have a bunch of guns and ammo and stuff. Like there's a lot of utility to that, and driving the cars and all that stuff. So yeah, I think there's definitely something to be said about having a certain allocation of your money in there. So that's good, man. Well, it's good to hear what you're investing in, and happy to share, my perspective on some of those things too. And I think it's knowing what you like, knowing what you're good at, knowing what you feel comfortable with, and going deeper into some of those things. So,
Yeah, I think
cool,
real
man.
quick,
Good
if you
market
don't mind.
update.
Yeah, I'm sorry, Tim. Just one thing, couple of things here, real quick. One, your biggest investment will always be yourself. I'm always investing in me. I know, Tim, you're always investing in yourself. I also think your number one investments will always be your own companies. I know you said that as well. So I want
Hmm.
to be clear. Like I would put all my money in all my companies because I believe in them, because I believe in me, and I believe in my team, and I believe in what we stand for. And then also invest in memories, invest in moments with your family and the people you care about. Right? These are great investments, memory investments. There's not like you're not going to see it on a pie chart and all this stuff with dollars moving around. But go invest. Go to $100,000 trip. Go do 10,000. Again, whatever the number is, doesn't matter. make those investments in the family and trips. And to me, those are the best investments in the world, dude. So memories. I know you're working on that too, but yeah, man, that's all. I just wanted to make sure we said that out loud.
100%, man. I'm so glad you did say that because that's puts everything back in perspective. So
Mhm.
awesome, man. Appreciate you being here, Mark. Appreciate you guys being here. And I'm Rich. Now, what? We're here every single week just trying to share value, trying to share perspective, bringing some real rock stars, ultra high net worth individuals onto the show, and just talking about once you make money, once you build a business, now what do you do, right? What is the next step in order to optimize fulfillment, not just optimizing your bank account? So we
Yep.
talk a lot about money and dollars and decimals and that stuff, but we're really focused on impact and those memory dividends too. So appreciate you guys
Absolutely.
being here. Mark, any last words?
Nope. Keep sharing the show. Let us know what you guys want to talk about and bring us some guests. Let us know who would be a great guest for the show. Appreciate you, Tim. Appreciate you guys. Thank you, guys.